Good afternoon, everyone. We are back again with another topic of discussion. Today's topic is reimagining B2B payments in post-COVID-19 economy. Basically, we are going to talk to Udayan today on the future of B2B payments. Good morning, Udayan.
Morning. Good morning.
Good morning. How are you? How is the UK opening up for economic activities?
Yeah, I think, over the course of the last week, we had further clarity over the weekend, and the UK is starting to open up quite a bit. But obviously, the biggest question now is going to be cross-border travel and how that is affected. It's still unclear. So, I expect to see some more clarity over the coming days.
Super. Yeah, that's good. That's good. Excellent news. Good news. Udayan, good to have you again. Now, COVID-19 Special Value Series. We have this special show every day with subject matter experts from the financial world. This is our way of showing solidarity along with you and others from the financial industry. Welcome to the show. Udayan has been a keen proponent of the fast-changing landscape of financial services. Fintech is now a buzzword, right? We all know fintech, and you use this so often now. But Udayan fell into the intersection of financial services and technology well before the term fintech came into being. In those days, we used to calling it as the frontier markets. Udayan is located in UK and is a co-founder of Apis and Themis Group, the first specialist global investor. He has made approximately 32 investments in startups with a technology edge. Our topic today, as I mentioned earlier, is reimagining B2B payments, that is business-to-business payments in the post-COVID-19 economy. We will discuss with Udayan about the future of B2B. So Udayan, according to the Forrester, by 2021, B2B e-commerce will be a staggering $1.2 trillion in revenue. Now, that's a large business. And most companies, I'm sure, will want to take a pie out of that and working towards digital payments, which are, I think, growing significantly. Of these B2B payments represents a vast majority. So if cash flow is the lifeblood of business, then the B2B payments represent the, shall I say, the arteries and veins. For a body to be healthy, blood must flow efficiently to and from the heart. So for a business to be healthy, B2B payments must also move efficiently in both the directions, just like the blood flows. So what challenges do the B2B companies face when it comes to capitalizing on trends both in domestic and cross-border B2B payments?
So I think B2B payments, firstly, is probably the single most interesting opportunity that's open right now to companies in the payment space. So if you think about it, the large majority of innovation in payments globally over the last 10 years, as you've seen independent companies come up, has been really consumer-driven payments. So we've seen a lot of consumer-driven applications, consumer-driven innovations, etc., that have come up. B2B payments has largely been ignored and has largely been the domain of the banks. It is indeed a $1 trillion plus opportunity, and it's particularly interesting in the small and medium-sized enterprise space. Obviously, the large corporate space with cash management and payments for them is where the very large financial institutions are covering and are interested, and it's difficult to break into those large corporate payments. But I think in the middle market segment is where it's very interesting. The banks have to date been very poor in servicing those sorts of companies, and so that creates the opportunity. And I think the single biggest opportunity that sits there is the following: we need to think about B2B payments essentially as what follows supplier relationships. So if you are a company, let's just postulate in the manufacturing space.
Yeah.
You are manufacturing something, you are buying raw materials from 8 different suppliers.
Yeah.
The raw materials are sent to you, an invoice is sent to you for those raw materials. You then receive the invoice. At some point, you pay the invoice and you initiate a transfer for the amount that sits on the invoice. Today, this is a deeply inefficient process. And the reason it's a deeply inefficient process is in most places, it's paper based. And I include attaching an invoice to an email as being paper based because all it is a different form factor to get the paper to you.
Yeah.
And then you pull out that invoice, you enter it into your system, you initiate a transfer, you send the money back. Now, if you think about it through this entire process, many things happen. One is that uh, the recipient of the payment needs to wait until the payment hits their bank account. They then need to match the amount that's hit their bank account with the invoice. And in their ERP system, and the accounting system, they need to show that that payment is now matched with the invoice. Sometimes there are bank charges and they need to do the reconciliation. The numbers don't match. Sometimes the payment just disappears and they need to chase. Sometimes the payment is sent to the wrong company, so it needs to be reversed and sent back. It's massively inefficient. I think and if you think about it from a buyer's perspective, not the supplier's perspective, it's exactly the same thing in reverse. When they send out the payment needs to be matched to the invoice, and they need to have a confirmation from the supplier at some point that they've received the payment and that invoice is closed out. And the amount of manpower this typically requires is enormous. So, you're talking about a lot of inefficiencies in process, which exist in today's system. And the banks really don't help. The banks are, number one, charge a lot of money for B2B payments, even though the marginal cost of those payments to themselves is very low. And they don't provide many value added services for those payments. Now, we have seen two or three really big global innovations that have happened over the last 10, 15 years. The first one is the rise of the cloud, and within the rise of the cloud, the rise of cloud accounting. So, accounting is very rapidly moving up to the cloud, and most people are moving away from having a accounting system that's stored on a local server into a cloud-based system, which is a software as a service provision. So there are very large companies globally like Xero and others, and even the traditional companies like Intuit and others who are in the accounting space are moving to the cloud. Now, what that means is that firstly, you don't have data reconciliation issues with your own accounts, and secondly, through the provision of APIs into those cloud accounting solutions, you can now start to streamline the workflow to get these invoices paid, reconciled, etc. The second big innovation has been in real-time payments. So we've literally right around the world, and India was actually a pioneer in this, have now real-time payments. So you can initiate payments and real-time move money from account to account. You don't have to do the typical T+1, T+2, T+3 settlement that used to exist in batch-based payments previously. And B2B payments are now embracing real-time payments through ACH real-time payments, and making it that creates a level of efficiency around moving money. The third big innovation has been the rise of a new standard, which some of you may be familiar with, which is the ISO 2022 standard. And that standard essentially is a set of data standards where you can attach a whole bunch of data to a payment. And the ability to attach a whole bunch of data to a payment then allows you, for example, to attach the invoice details to the payment itself. And what that allows you to do is do automatic reconciliation and straight through processing of payments and take away a lot of this inefficiency that exists in the payment value chain today for B2B payments. So these innovations now you're setting up a stack which allows people to build interesting payment models, particularly for the B2B companies. So one of the things that I think you probably start to see around the world is the rise of interesting companies that are starting to build on top of this stack. Now let's take an example, the US market. I'm just using
Yeah.
it because there's a lot of
Sure.
good statistics available in the US market, right?
Yeah. Yeah.
And the US small and medium sized business payment market this year in 2020 is worth about 9 trillion. Okay, so it's a very large
Large.
number.
Yeah.
80% of those SMBs still use paper checks to make payments. Now, this is a very antiquated way to do payments, right? So they still use paper checks to do payments. The single biggest focus of many of these companies now is to focus on real-time payments. So there was a survey done recently, where people want to either use real-time payments or same-day ACH to move these payments. And therefore, what that allows you to do is remove losses from fraud, because there's a lot of fraud in checks that exists. Losses from fraud last year were staggering 4.2 trillion in the US, and so taking out some of these friction points removes some of these issues such as frauds. There are also certain industries where these sorts of real-time payments become increasingly important. So what we're seeing essentially is a really interesting rise of the relevance of these new technologies. So in terms of just importance, you have these real-time payments, which is account-to-account transfers. You have um, companies that are creating automated payable systems, companies that are enabling the payment itself through embedding, and I talked about this previously, the contextual financial services, through embedding a button within the electronic invoice that's presented, and then using push and pull payments through the APIs into the ACH to initiate that payment. You also have automated receivables, just like you have automated payables. You have automated expense management. So today, again, expenses is a big part of what SMBs have to do for employees and others. Again, automating all of that. And one of the most interesting areas, particularly in segments like travel and others, has been the rise of the virtual card. So using this idea of a virtual card to make specific payments, and you can customize virtual cards um, in many different ways to suit those industries. So these are some of the trend lines that I'm starting to see, and these are trend lines that I'm starting to see across multiple markets.
Great, thanks. That was a detailed dive into that, what's happening on the B2B. Thanks. But most of the operational aspects, you did mention a few of them, with the problems of reconciliation and mismatches and all that. I guess that's also true for any other channels like a B2C or other payments that happen, right?
Well, I mean, look, B2C payments reconciliation issues are typically, look, if you've made a purchase on your credit card and you receive your statement, the way you reconcile it is you look at your statement and you look at the receipt that was on the credit card. They typically tend to be the same because there's no human intervention in that system, right? I think the issue with reconciliation in B2B is it's a critical part of the workflow of a business to reconcile invoices to payments to the accounts, because in order to get audited accounts, and that's very, very important, because if they make a mistake there, then they actually can miscommunicate and miscalculate their tax liability. And if they miscalculate their tax liability, they're open to sanctions from the tax authorities. And that's the other point here, that the tax authorities are very keen to push all of this automation and accounting in the cloud, because it does many things. One of the things it does is it removes the error. The other thing it does is it removes fraud. One of the biggest areas of both accounting fraud, right, and tax fraud is revaluing invoices. So you're a company, you send out an invoice to a customer hasn't paid the invoice for 90 days. So technically, that starts to look like a bad receivable, right? Now, now in your accounts at the end of the year, you have to show that as receivables due over 90 days, or long-term receivables, or a bad receivable, or take a bad debt charge against it. Now, what some companies have been doing is they will take the invoice, the original invoice, they'll tear it up and reissue it for a later date, so that from an accounting perspective, that invoice appears as a current invoice. When you do that on the cloud, you can't do that because every invoice is date stamped and can never be changed. The tax authorities can view that. And interestingly enough, anybody who's providing you credit, which is the next part of this B2B payments discussion, is able to actually look at revalued invoices, because that's one way of making of sort of masking the true credit picture of a company to a credit provider. And coming, one of the key things I talked about, in a previous discussion was that payments generally are not going to be able to make money on payments, the core payment product. Where you're going to make money is on value-added services, where you solve a pain point for a customer. The value-added service for a B2B customer is, for example, automating some of these STP issues like invoice reconciliation. The other big value-added services is invoice factoring, automated invoice factoring. You send an invoice to a supplier. The invoice is typically due in 30 or 60 days. And there's an intermediary there who will basically give you a 5% discount and pay you the money up front. And it can be all done in a very automated fashion, right? And again, that enables it. And then the payment provider will either be providing that, or there will be a retrocession of revenues to the payment provider, and the payment provider makes money through those kinds of transactions. So these are some of the things that one sees.
Yeah, absolutely. Yeah, thank you. Thank you, Udayan. That's good. So I have two points to make. So yeah, I've been telling you that we are live on YouTube already, so that we continue to be live on YouTube. From today, we also live on Twitter. So that's an additional channel we have put through. So participants can come through Twitter or YouTube or the EPS channel to come into these shows on a day-to-day basis. The second observation I want to make is that I'm sure a lot of participants have a lot of questions to ask. You may put your questions in the Q&A box, and the back office team will get across to Udayan as soon as possible to answer the question. I'll post that question to Udayan, and you will get your answers from Udayan straight away. So you can start putting your questions in the Q&A before it gets too late. So Udayan, the digital age has given opportunity for businesses to expand internationally. Yeah. So I'm talking about the B2B cross-border. Okay. However, facilitating cross-border payments and managing liquidity has been a challenge. Is the future going to be better for B2B cross-border payments?
So yes, I think the future is going to be much, much better for B2B cross-border. Part of the reason that we've had lots of issues around B2B cross-border payments is, I talked about this right at the beginning, is the inefficiency of cross-border payments from a bank perspective. So it is not uncommon. In fact, it's very, very common that a supplier receives a payment. So let's take, you have a Indian company that's making, let's say, generic pharmaceuticals. Indian company it has a customer in the US. Indian company ships over, a order of generics, bills that company, let's say, $500,000. So that's the invoice that's going on. Company receives the invoice, and the first thing it needs to do, it typically does, is it provides a letter of credit through its bank, right? So that assures the company in India that it will receive its payment once the goods are received. Right. Goods are then shipped over. The company says it's received the goods, basically initiates the payment, and the letter of credit is then removed. So the bank's liability around the letter of credit is removed. Now, at every step of this process, there's massive inefficiency. And where there are the two biggest inefficiencies are in the data capture to the institution that's providing the letter of credit, because a lot of that is still very manual, number one. And the second is actually when the payment itself is initiated from the US to India. So what sometimes happens is when the payment is initiated from US to India, it's initiated and somewhere along the way it's lost. And you don't know where it's lost. You don't know where in the chain it is. Then 5 days later, Indian company rings up the US company, says, where's my payment? US company says, but I sent it to you 5 days ago. They say, we haven't received it. US company picks up the phone to the bank. Where's the payment? Bank says, oh, I don't know. It'll take me 24 hours to locate it. So 24 hours later, it's gone through all the things, and that's a lot of time and effort. And it finds that the payment has ended up with the correspondent bank in India and is not going through because there's one data capture field that the Reserve Bank of India requires that is missing. And so, so there you've lost an entire week. That's a week of liquidity that's a week of liquidity that the Indian company has lost, right? Because it could have had that payment a week ago. And so the innovations that are occurring, there are lots of interesting companies, in fact, that even we're looking at. the innovation that's occurring is the ability to really data capture a lot of the data that is related to the invoice and bundle it with the whole transaction. What that allows you to do is to have a letter of credit provider or a credit provider that sits in the middle of that cross-border transaction to be able to do automated invoice factoring. So to be able to provide. The second is the ability to really capture and connect the payment to the invoice and automatically reconcile the invoice. And the third, from a buyer's perspective, to be able to also capture all the data around the payments being sent, etc. So really automate it. And I think that's where we're going to see a lot of innovation. The other thing is that because of um, the increase of real-time payments and real-time ACH infrastructure, we are rapidly moving away from T+2, T+1 settlement to T+0 settlement. So you can actually do same-day settlement, even cross-border. That's starting to happen because a lot of companies can synthetically do that by actually having hubs in each country and doing local ACH transactions in each country, which are offsetting. And if you're able to do that, then you can actually create a synthetic uh, T+0 transaction. So we're starting to see a lot of that opportunity and those sorts of products come up.
Thank you, Udayan. That was on the cross-border B2B payments. I think we had sufficient insight from Udayan. Udayan, the global crisis of 2008-9, we spoke about it also last time, did generate a lot of stress within the world's financial systems, but could be addressed by the authorities with a lot of radical monetary and some of the physical policies. So is this pandemic doing? COVID-19 has generated a wave of drastic changes, or is expected to have a wave of drastic changes that will come out in the financial sectors. So can you explain with some use cases what is the future direction in the B2B payments?
I mean, the use cases are largely the same as what they've been in the past, right? Which is the biggest use case for, well, there's two types of B2B payments broadly is supplier payments, right? So that's basically the bulk of where B2B payments are. It's where you are supplying either a physical or a dematerialized or a service, so physical or dematerialized product or a service to another customer, and you need to bill for that customer. So that's always existed. That's global. That's either domestic trade, cross-border trade, global trade, however you want to look at. That's the single biggest use case for B2B payments. An emerging B2B payments use case is really related to the there are really two or three areas which are pretty big that's happening, right? One is this concept of smart cities. So we are rapidly moving into smart city infrastructure, which is driven by IoT, Internet of Things. So what does that mean? So one of the things that COVID has made pretty clear is that physical payments, i.e. using cash, is not only inefficient, but can also be a carrier of disease, right? So people have now become sensitized to actually finding other ways to make payments. That was actually a thought process and a concept which people had been thinking about for a number of years in the concept of these smart cities and Internet of Things. So let me give you an example. Today, let's say I'm in Bombay, which we're all familiar with, or most of us, or many of us are familiar with. You are using the C-Link, right? So 2 years ago, when you were using the C-Link, you'd cross the barrier on the Bandra side, and then you would basically stop and you'd hand over your 500 rupee bill or whatever it was, get the change, and get your either day pass or return pass for the C-Link, right? So firstly, massively inefficient because you had to stop and you see all the traffic building up. Secondly, of course, you're touching all of this, right?
Yeah.
Many countries, and including India, now moving very quickly to electronic tolling and electronic tolls, so that when you pass a barrier, you have a tag. The tag will, through RFID or through some sort of proximity system, will register that you've entered the zone and will automatically deduct the money from either a prepaid wallet or directly from your bank account in many places, right? So that that infrastructure is, or you'd already started to see that. I think what you'll see is that will go to the next level. So we will move very much into on-demand usage of infrastructure.
Yeah.
So rather than using a toll road for a stretch, let's say Delhi Jaipur, right? You will use it per kilometer. There'll be sensors along the way, and every time you pass the next kilometer, that little payment is going to get deducted. So if you think about truckers who are using that infrastructure a lot, their businesses, they're using a road infrastructure around the country. As they do each kilometer, the money gets deducted kilometer by kilometer. And that infrastructure, which is a micropayments infrastructure, will be a big enabler of the on demand economy around the world for businesses. Because today we always think about the on demand economy for individuals. Actually, the on demand economy is exactly the same for businesses. Businesses are very much going to move into this on-demand economy. And so this infrastructure that I talked about earlier, real-time infrastructure, super low cost, micro payments, all of this infrastructure is going to enable these. So that's kind of an interesting newer use case that you're going to start to see very rapidly for B2B payments.
Okay, thank you. Thanks, Udayan. We did look at what are the use cases Udayan did explain. So one of the observations he did make was that, and which has been kind of a lot of people also in India have been talking about, the danger of carrying cash because of the virus spread. And I just saw a note from ITMA. ITMA is the Association for ATM across the globe. So they have very clearly clarified that there is no scientific reasoning to say that cash carries this kind of the COVID-19 virus. So they have kind of said this is a myth and it's not truth. So whatever it is, though people have been hearing this, I thought I might as well keep this as a point of observation. Like I said earlier, participants, please put in your Q&A. We will get across to Udayan as much as possible. So Udayan, as you've been saying, B2B payments our systems are under stress, and that there is no doubt. There are sectors that are making and receiving fewer payments than previously. Obviously, those examples are very clear to all of us: the hotel chains, the airlines, and many other industries that are involved in some way with the global tourism industry. So this is a part of the stress, I guess. Okay. So my question to you is, Udayan, is that we know that post-COVID travel, hospitality, and other related industries will be badly hit. So do the B2B campaigns in these sectors is best avoided, at least for some time?
Well, I don't think there are lots of companies that focus on travel as a B2B vertical. That's important.
Yes.
Probably the single biggest group of companies I talked about this as a product set at the beginning, is around virtual cards. I think virtual cards are a very important part of travel because basically how travel agents get paid and pay for services back and forth are through these virtual card systems. Now that's become a very big area. Do I think travel is permanently affected? I think travel is affected, but will come back. Now, when it comes back, we don't know. It could be 1 year, 2 years, 3 years. It's difficult to tell. If you use 9/11 or as an example, which was really the last big global shock around travel was pretty much back to normal levels about a year later, right?
Yes,
so
absolutely.
so I think that the travel industry continues to be an interesting opportunity for payment providers. But I think what's interesting is that the travel industry, the shock that's occurred at the travel industry means that the acceleration of the efficiencies around payments for the travel industry become more important. And the concept of on-demand payment for travel starts to become even more important because people are unwilling to buy and put a lot of money at risk to buy travel massively in advance for the reasons that you've seen now through this COVID crisis.
Yes.
So I do think that this will continue to be a viable vertical, and people will continue to do it. So, but just to come back, that is not the largest vertical. The largest vertical, as I mentioned to you before, is traditional supplier payments in B2B. It dwarfs the the overall size of the travel industry from a payment perspective.
Yeah, all right. Thanks. What you observed is right. 9/11 had that impact, and I think India, I mean, the world recovered out of that pretty soon, and we are back to traveling like before until this COVID has come into being. So I'm sure we will recover, and it may be a short-term hit for the industry, which happens whenever a black swan hits. So let me move to the B2B payment technologies there. Okay, how would this technology change the B2B payments landscape? Do you foresee a lot of changes in the technology for the B2B payments landscape?
I think I touched on most of the technologies, right? So let's just recover some of them. So clearly, go one by one. Digitization of B2B commerce. So the growth of B2B networks. So you have a lot of B2B marketplaces, this concept of marketplaces, where before the way you used to transact with suppliers and buyers was trade shows, things like that. Now you have these online marketplaces. Alibaba is the biggest online marketplace. So you have, so that's a huge enabler. So that digitization is a massive technology enabler. And there are other marketplaces, Amazon Business, others that are rising and around the world. And those e-marketplaces are basically becoming a popular solution both for wholesalers and distributors who are not going to build their own e-commerce engines because this is a very wholesale game. So that's that. There is a massive movement away from physical payment methods into electronic payment methods. So I talked about checks basically going out of circulation in most countries. So that again moving. Then there is massive implementation of new technologies I talked about a little bit, electronic invoice factoring, working capital financing, which is driven by the availability of data in the cloud. Because once you have data in the cloud, you can actually build more automated systems around providing that credit in the cloud. As a result of that, you're building automated letter of credit systems, invoice factoring, incentive systems to pay invoices earlier. And then on top of all of this, which is quite interesting, is you're building, lots of companies are building interesting analytics, because analytics become very, very important for companies to understand payment flows, demand elasticity, price elasticity. All these things can be built on the analytics on top of these entire cloud. And these are being enabled then by faster payments, which is basically real-time payments. So the concept of faster payments or real-time payments. Something that I haven't talked about, but which is starting to have a big impact, is the rise of blockchain. So the idea of using blockchain and building the blockchain distributed ledger technology in the mainstream B2B transaction processing industry is starting to happen. So people are now actually actively using cryptocurrencies as a way of settling invoices. You're starting to see that around the world. It's very, very early days, but it's starting that, and that's because it's much cheaper to use sometimes Bitcoin to make a payment than it is, but also the underlying technology to be used, for example, for invoice settlement, etc. There's a very, very interestingly enough, there's a proliferation of mobile payments in B2B payments, which didn't exist before. So you're starting to see that. And as I mentioned right at the beginning, all of this is being enabled by our cloud-based infrastructure. So that's kind of a sort of framework of where the technology is.
Thank you. So I go back to one question before on cross-border, and I have a question for you from one of the participants. It says, Swift's cross-border payments prevails for many decades, and slowly I think Ripple and TransferWise are taking a chunk of the global B2B transactions. So how the future of cross-border payments is poised in the near future?
So, firstly, I would dispute the fact that Ripple and TransferWise are taking a chunk of B2B transactions. The number of B2B transactions that either Ripple or TransferWise are doing is minuscule. It's not even in the 0.0000001% of anything, right? Globally.
Oh,
So
okay.
it's just tiny. So I think that today, the vast majority of I think I mentioned, I think $13 trillion US market, for example, or other markets of those payments is basically traditional, either traditional bank to bank ACH,
Yeah,
or as was mentioned, is Swift, typically bank to bank cross border using correspondent bank infrastructure. That
yeah,
legacy is still very strong. What you're starting to see is a shift into these new payment types and into these new networks that's starting to happen. So I think we've got a long way to go before there's a very significant dent on the market share for the traditional global correspondent banking infrastructure. It's going to come.
yeah,
I don't know if it's 1 year or 10 years, but that's the kind of bid offer in terms of how long it might take. And we have to see how that pans out. And I think there are a multitude of factors, but it's also related, as I mentioned earlier, to many other factors. How quickly the global SME market moves into the cloud-based accounting infrastructure, because that itself drives this very, very quickly. Or how quickly people move into electronic invoice strategies, how quickly ERP moves into the cloud, how some of these points, what is the need for credit for people, because that itself drives the need. How sensitive are people to liquidity? So I think
yeah.
that's really going to drive the shift into these new payment types.
Okay, yeah, thanks. Uh, so I dwell into next this thing, which is the counterparty risk. Okay, so to put it in plain English, a question is that will the business that is due to make a payment to my business in 2 days' time still be in operation? So do I run a risk? So in the worlds of payments, the related question is, what happens if my B2B payment services provider goes bankrupt?
I think it does. Firstly, I don't think it matters if your B2B service provider goes bankrupt, because typically your B2B service provider you're not taking any credit risk on the B2B service
Yes.
provider. They are facilitating the payments from one account to the other, and typically they don't touch the payments. If they touch the payments, they're typically a regulated institution, and then there is a whole regulatory infrastructure that sits behind them to make sure that your money isn't lost, right? So
Yeah.
firstly, keep it. So really, the risk you take with the B2B service provider is an operational risk issue, right? So
Yeah.
you basically have built systems, you have a provider, that service provider is facilitating your payments. And it's absolutely a legitimate concern, right? And the way you get around that legitimate concern is you typically have at least two service providers. And that's something we're starting to see in payments. Now, I can give you a real example in India of this. So
Sure. Yeah.
as many of you know, Yes Bank in India has had some significant issues, right, over the
Yes. Yeah.
last 6 months or so. Now, one of the things that people didn't realize was that Yes Bank's payment infrastructure was a big enabler for fintech companies in India. So a lot of fintech-based companies, marketplaces, others relied indirectly on Yes Bank's payment infrastructure, which was then connected into NPCI and IMPS and created an UPI. So a lot of the UPI kind of infrastructure was built on Yes Bank infrastructure. And Yes
Yeah.
Bank essentially at some point just had a massive outage, right?
Yeah. Yeah.
Because of the issues. And when they had the outage, a lot of these businesses suddenly found they couldn't make any payments. That then created a massive search from many of these companies
Mhm.
to a second provider. And so now most of the very large companies that are moving payments around in India have multiple providers, typically two, because more than two, then you're wasting time on integration, etc. So you have a main one and a failover one, or you're doing some load balancing between the two providers so that you give them both enough business to be meaningful. And so I think that's kind of where you're going to see this going.
Okay. Yeah, what you said about Yes Bank was true, and I think a lot of fintech companies had to relook at their plans, because such a big bank having problems was not foreseen. But I think in a financial world, there is nothing called as too big to fail or too good to fail. Things can happen. things can change. So while people are sending me Q&As, I would also I will also open up for a direct question to Udayan. If anybody wants to, please simply raise your hand, and the back office will notice it and will enable you to put that question directly to Udayan. So, so continuing our discussion, Udayan, further. Are banks and payments ready for the next frontier in B2B payments? Typically, banks, let's look at banks. Do you have any recommendation for the banks to get started on the B2B payments transformation journey? I mean, banks are definitely there in the B2B, but we are now looking at what kind of recommendation you would give to banks for the transformation journey to the B2B.
So look, firstly, I think there's a mindset issue. So banks have traditionally thought of B2B payments, just like any other payments, as a sort of financial product and a financial transaction, right? It is partially a financial transaction and a financial product. I think the big change is that what I talked about earlier, the rise of the cloud, the rise of cloud-based accounting, the rise of electronic invoicing, the 2022 ISO infrastructure, all of that um, means that increasingly it is a financial business, this much, and a technology business, this much. And that mindset change is the big change. The mindset that the banks need to think about is um, that they need to rethink themselves as more than a financial business into a technology business, right? So, so the banks who are really attacking the B2B business payment market and really rethinking this and thinking about, let's say, integrating blockchain technology, integrating some of the technologies that I talked about earlier, are the ones that are reconfiguring their staff into technology staff. So if today, if you look at Goldman Sachs, which is a very well-known global institution, their single biggest hiring, the single biggest type of people that they've been hiring over the last few years has been coders. They've been hiring people who are essentially in the software space and coders, because these are the people who are actually going to build this technology infrastructure around the financial infrastructure. And so that mindset change is really the first thing that they need to do. The second mindset change is to understand the problem that they're trying to solve. Banks traditionally essentially built a product without really understanding the problem that they've solved. In the bank's mind, the problem that they're solving is, I need to move money from A to B. That is not the problem for a business. A business's problem is, how do I get paid for my products and services? That's the problem they're trying to solve. And embedded within that problem that they're trying to solve, you need to think about the three things that I talked about earlier. They need to issue the invoice. They need to send the invoice. They may need to get a letter of credit. They may need to get invoice factoring because they want the cash flow earlier. They need to get paid. They need to do the reconciliation, and they need to put that all onto their accounting system, calculate the tax, and pay the tax to the tax authority. That's not an exhaustive view of what's going on, but there's a lot of that going on. That's the problem they're trying to solve. And how do I do that efficiently without having 25 people in my back office doing reconciliation, all the errors, and then having to fix the errors? And if the banks start to think about that being the problem they solve, and how do you build an infrastructure around that, that's the first step, really to be building a proper B2B business payment service.
Okay. Yeah. All right. That's so I did mention about someone to ask you a direct question. We have a very experienced banker by the name of Harish Prabhu. Harish, can you unmute yourself and ask the question, please, directly to Udayan?
Yeah, Udayan, hi. What's your take on Swift's recent decision to venture into the A2A transaction space, or B2B account-to-account transactions that facilitate direct credit into constituent bank account through their futuristic platform that they are trying to build on ISO 20022? I mean, Swift is actually going, in my opinion, it's forward integrating, right? Which till now was just doing messaging, right? Now it's actually getting into the futuristic way where all financial institutions will be able to actually resolve their entire inefficiencies which have been there since, time immemorial. So
Thanks, Harish. I mean, it's a good question. So for those of you who don't know, SWIFT is the Society for Interbank Payments. It was set up a long, long, long time ago. And essentially, it was a secure messaging infrastructure that existed for banks, particularly in the correspondent banking space, cross-border. And the way SWIFT works is that the way SWIFT used to work is that Bank A in country A would send a SWIFT message to Bank B in country B. That message was sent through SWIFT's secure network. So it was basically difficult to hack into that network, which is a completely private infrastructure. And when Bank B received it, it understood that it needed to, let's say, debit an account and credit the following account. And then the settlement happened through what's called central bank money settlement. So every bank has an account with its local central bank. And then every central bank there's the Bank for International Settlements that sits in between, that settles between the central banks. And that's how essentially that infrastructure works. So very cumbersome, hub to hub, but really worked because it's the only way to solve the risk and credit issues for cross-border payments, right? The big change that's happened since, and I talked about these general purpose technologies the last time, was that you had something called the internet that suddenly reared its head over the last 30 years, right? And the internet essentially has created a ubiquitous communication network that sits across the world. And through the use of security protocols, you can actually send pretty secure messages across the internet because of the public-private PKI infrastructure. For encryption, you can send pretty secure messages across the internet without having the need for a private network. So SWIFT's private network, as a result, has become obsolete because you don't really need a very expensive private network to send messages from A to B. You can send it across the internet and be just as secure using the modern day cryptography to do it. So that means that SWIFT's business model suddenly starts to look a little bit shaky because you have new technology that's going to replace this legacy technology. Now, I for many years, for those of you who don't know, I was a board member of InnoTribe, which was SWIFT's innovation arm, and I sat with the board and actually talked a lot, discussed a lot about how do you evolve the SWIFT's business model into this new age. The first thing SWIFT did as an intermediate step was they built a cheaper network which was less secure than the original network, and therefore they reduced the price. But obviously that wasn't enough because again, technology is taking over and cryptography, etc., allows you to be pretty secure in the normal internet. So SWIFT has had to rethink its business model, and it's very logical for SWIFT to move further into the value chain and do both B2C and B2B payments, taking advantage of regulations like the Payment Service Directive and the ISO 20022 set of standards to be able to do it. Where SWIFT is very, very strong is as a standards body. So it can sit, because it has a relationship with pretty much every global bank and every bank, it can sit in between and create a set of standards that allow people to talk to each other. And so using that position where it can set the standards, it's started to think about moving into the value chain and getting into, let's say, one of the things they're starting to do is build real-time payment infrastructure. So Australia ran a RFP a couple of years ago to build real-time payments infrastructure. There are, MasterCard through VocaLink participated in that, SWIFT participated in that, a few other people participated in that, and SWIFT won that contract. And as a result, SWIFT has built out the real-time infrastructure. So they've reinvented themselves as an enabler of that technology in some markets. And then now, essentially, they're doing exactly what MasterCard and Visa and others are doing, which is building this B2B account-to-account infrastructure, essentially built on the cloud, right? So it's a logical way to, and where SWIFT is very strong, as I mentioned to you before, is the standards and the distribution infrastructure that they have. So they're leveraging on that to extend their business. So I think that's the thought process that's that exists at the SWIFT level.
Okay. I hope you have, Harish, your queries have been answered.
Well, thank you.
Yeah, thank you. Thanks, Harish. Udayan, one question that has come through is what measures RBI should take to facilitate B2B payments?
So I think that's an interesting one. I think what RBI broadly essentially needs to almost extend the UPI infrastructure for B2B payments, which I think de facto, I don't believe that there is a real sort of differentiation between B2C payments, C2C payments, B2B payments around that infrastructure. So I think the India stack, which is all the different levels of the stack exists. I think the single biggest area that the RBI and SEBI and all the other regulators need to enable is to push people hard to push the accounting into the cloud. And I think that's already happening. So already, for example, if you're a listed company, you have to file through XML into into the cloud. It needs to be in a very standardized format. All your accounting needs to be in a standardized format. That'll rapidly go into electronic tax notification and all. So all of that I think is already happening. So I would say that broadly it's pretty much on track. Now the trick is going to be for companies to build interesting business models on top of this stack. So I hope that answers the question. I think we might have, we might have lost.
Hi, Udayan, Seshadri here. So going forward, we heard extensively on the B2B future, about banks, readiness, the players in the market, so wealth of information. But my one question, just a little bit moving away from B2B, do you see two questions? Do you see a B2B success model where as a company you've invested with your global experience, point number one, and moving away from B2B, do you see a future in B2G, business to governments? What is your take on this?
So the first question was mobile payments, you were asking, the success of B2B and mobile payments. Yeah, so let me answer that. So I think the mobile, absolutely, success of mobile payments is more of a convenience form factor. So once you've got everything running in the cloud, then your ability, you don't need to be sitting on a desktop to be accessing your invoices and your payments and everything. Everything can really be built. You can have a cloud, you can have a mobile-based app that's accessing that information and doing the payments and reconciliation, everything off. And now you're starting to see that. You're starting to see that right around the world. For example, there's a company in the US called Veeam. For those of you who don't know, there's a business in the US called Venmo, right? And the way Venmo works is that you let's say you go to dinner in New York and your dinner costs $100 and you want to share the cost of that dinner with the person you're having dinner. So you want to share 50, right? So you basically put their mobile phone number into the Venmo app, and then Venmo will send that recipient saying, please enter your account details and you'll receive your $50. And then you're both sitting now on the Venmo system. And then the next time you do it, you put the mobile, it automatically sends the money because you're in the system and it has the customer details, right? So Veeam actually is very similar. It does exactly that, but for businesses, right? And it does that also through a mobile experience. So it's really built natively in the cloud, and the form factors can exist across, desktop, mobile, etc. So I think that's the answer first. The second question around B2G, absolutely, B2G payments globally are an enormous part of the overall payments. And so the concept of electronically filing your taxes, electronically paying your taxes, paying your fines, duties, etc. Let's go back to an example I used much earlier in this discussion, which was around the IoT real-time demand-based infrastructure that's going to exist for payments in the future. One of the things, for example, I was using the example of trucking. You have truckers. Truckers are going from place to place, but sometimes from country to country. The best example of that, let's say, is in Europe, because you have a road network that goes all through Europe and it passes 15 different countries. Now, if you're passing through a border where the countries have a tariff agreement between them or have some sort of duty agreement between them. One of the things that's going to happen is that as the trucker drives through the border, the information of its cargo is already sitting in the cloud. There'll be a transponder at the border that will pick up the truck's identification details. It'll pull the information of the cargo that's sitting. That cargo can be sealed, hermetically sealed. So there are companies that are using blockchain to put an electronic seal at the end of the container so that it cannot be opened until it reaches. And if it's open and it reaches the transponder says it's been opened and the customs authorities are alerted. So what that means is that the customs authority no longer need to go and inspect what's inside. Because it's been sealed on one end by a competent authority and on the other end it's opened by a competent authority, it can go through. So as it goes through the border, the transponder picks up what the cargo that's sitting there. It'll then calculate the duties on the cargo and it'll automatically deduct the payments through the infrastructure for the payments and provide the receipt, which is then reconciled into the system back to the customer. So that's an example of how I think, B2G payments are going to get revolutionized as this new infrastructure comes in.
Thanks. Awesome. Thanks, Uday.
Thank you. So we are almost coming to the end of this session. So let me, one topic we did leave out was on the commercial finance infrastructure. So transferring the commercial finance infrastructure is the force behind the next stage of the evolution of B2B payments. What, according to you, are the major shifts that will transform B2B payments and make it more easier?
Yeah, I mean, I think I've touched on most of these points through the discussion, right? So invoice factoring, letter of credit, automating letter of credit, automating loans to institutions based on trade flows. All this area of commercial finance is going to get rapidly changed. There are companies like iWalker in the UK, Cabbage in the US, who are already using cloud-based accounting information to do instant loans to SMEs, just based on that. And that's the first step. I mean, essentially, we are going to go away from this concept of manual underwriting of credit in commercial finance to become very automated using real-time processing of data. And so all of that, as I said before, is enabled by by basically data in the cloud and the availability of that data in the cloud through APIs. At the same time, we talked in previous discussion about PSD2, Payment Service Directive 2. That also means that people's payments information is available from financial institutions through API-based infrastructure. So once people can pull that data along with the data of the flows, then you can do a very accurate assessment of credit and actually price that credit well and provide, commercial finance to companies.
Yeah, thank you, Udayan. I think we reached the end of the session. Thanks a lot, and thanks for everyone. So, like I said, this session, the series that we have every day, is our way of showing solidarity against the war against COVID. So we continue to have this war going on. We will be together in it. We will fight together, and I hope and I'm sure together we will all succeed. Jai Hind. Thank you very much for attending this session, and Udayan, thank you once again for coming and participating and giving a thoughtful speech. Hope to see you soon again.
Thank you very much. Pleasure as always.
Thank you.